obviously, first off, I'd like to thank certainly the City of Timmins and CME for the venue today. It's great to see that the attendance is up and very vibrant. And from Alamos's perspective, we certainly agree with Minister Peary's comments with regards to certainly the gold space. We are a gold company. 3250 was what was announced a couple times during his talk. Certainly with the history of the Timmins camp, Kirkland Lake camp, Val-d'Or, even to the west of us towards Wawa, I think obviously we're in a very good position for the long term with regards to this next stage of our production growth, certainly as a company, but I think from all companies certainly operating in the gold space, even into the junior sector, there's a bright future. So I'll talk a little bit about the company as a whole, but also focus a little bit on a recent acquisition that we made with Argonaut Gold, which is an operation right next door to our Island Gold facility currently. The slide that you see here shows the Island Gold shaft. So as part of our expansion, we were actually already undertaking a significant expansion with our Island Gold operation, basically converting it from a ramp access mine to a shaft access mine. So in the picture you see in the foreground there is the actual location of our shaft. It's got a depth right now of about 320 meters. Final depth would be about 1,350 meters, so we'll continue to develop that over the next couple of years. You can see over on to the right, the Island Gold mill, the current mill that we're operating at 1,200 tons per day. And you can see the acquisition that we made, basically they're right next door to us, the Magino mill and the Magino open pit operations. So I'll talk a little bit in more detail on that as well. Forward-looking statements, nobody can read that, but as usual, we're required to provide that disclaimer. With regards to the company itself, our guidance this year, we're looking to do about 505,000 ounces, so very similar to what we produced last year in 2023. I'll talk a little bit about a longer-term potential. We've got a good growth profile internally with some of the projects we're working on to actually bring us well above 800,000 ounces on the longer-term production profile range. Declining costs as well as we look to bring in some of these other projects. They're lower cost assets as far as gold production, so we'll actually decrease our all-in sustaining costs from our current guidance of $1,150 this year to below $1,025 range as we move forward in the longer term. And we are a Canadian-based company, and majority of our assets are primarily in Ontario currently, and we do have a project in Manitoba that I'll touch on as well. So you can see from the map itself, our Young-Davidson operation located just outside of the community in Matachewan, Kirkland Lake being one of the larger centers that we draw from as far as employees. The Island Gold operation near the Dubreuilville, community of Dubreuilville, and Wawa within that region as well. And then we do also have a producing asset in Mexico in the state of Sonora, which is the Mulatos district that we refer to, which is open pit heap leach operations. And I'll touch a little bit on our Lynn Lake operation with regards to our development pipeline. Share price, just a graph here to kind of illustrate, I guess, the growth profile that we've had from a share price perspective over the last couple of years, in relation to the GDX gold price itself and certainly the S&P 500. We've had some significant, growth in our share price, more than doubling, and really it's based on, the solid teams that we have at all of our operations, delivering on a consistent basis with our operations, in all aspects, safety, environmental, certainly with regards to the guidance that we put out to the market as well with regards to our gold production, all-in sustaining costs, cash costs, as well as our capital. We've been very strong in delivering on those metrics, and I think it shows in our share price that we've been rewarded on that basis. The company itself, just to give you a bit of an overview, it started in Mexico with our Mulatos operation. We acquired that in 2003 for an acquisition cost of $10 million. The current consensus as far as the NPV and the free cash flow generated with that project is over 1.1 billion. So it's been a significant contributor to the company and the cornerstone of our company really since 2003. And just last year we celebrated our 20th anniversary as a company. Over time, with continued strong performance from Mexico, we've been able to certainly improve the overall cash balance of the company and look at making some other accretive acquisitions. In 2015, we acquired the Young-Davidson mine from Arico Gold for a cost of $950 million, and currently with the NPV and free cash flow that's been generated over the operation, It sits at about $1.8 billion. And then moving forward in 2017, we acquired Island Gold from Richmont Mines. And then with the recent acquisition that we just announced a couple months ago with Argonaut and specifically the Magino mine, overall acquisition cost of about $1.2 million, and the NPV free cash flow aspect with regards to the value of those assets are now $3.5 billion. And our Lynn Lake project at this point, we released an updated feasibility study there last summer, but the expenditures to date with the acquisition cost and capital invested of about $145 million, we've got a consensus NPV of $604 million. So with those acquisitions that we made over the last number of years, we've added about $3.7 billion in value created to the company. Moving specifically to Magino and the acquisition that we made, as I mentioned in that first slide, you can see basically they're side by side. What's going to happen once we've obviously closed this, and we're expecting to close this deal in July. On a combined basis with Island and Magino, the overall gold production will be in excess of 400,000 ounces per year in first quartile costs. So it's going to be a significant contributor to the company, certainly, but putting us in the top sector from a point of view of gold production, certainly on an annual basis from an operating district. We basically almost doubled the reserve in the mineral inventory with regards to this acquisition to about 11.5 million ounces. And the main driver here, certainly with regards to the acquisition, has been the synergies. A lot of times in this space, you've got different companies working side by side, and the aspect of the synergies that it brings by combining those assets together. This one was pretty compelling. We had about a $515 million synergy benefit by combining the two assets into one. And I'll touch on some of the specifics to that as well. As far as Canadian production, combined annual production with our Canadian assets will be 600,000 ounces from a company perspective, and longer term potential, as I mentioned, to be over 900,000 ounces once we complete the Phase 3 Plus expansion, bringing Magino online, as well as some of the development projects that we have moving forward. General long section, just to kind of give you an idea what it looks like with regards to Magino and Island. So Island is an underground mine. As I mentioned, it's been ramp access since the very beginning. So we are converting that to a shaft access operation to a depth of about 1,350 meters initially. And you can see right next door to us is the Magino operation. Combining those two with regards to mineral inventory, well over 11 million ounces. There's a lot of potential, certainly both with Island Gold and Magino, to extend those well beyond their current mine lives, which currently are targeting about 19 to 20 years. With regards to the synergies, our Phase 3 Plus expansion was basically three components there. It was looking to put in a new shaft infrastructure, which has been the main focus certainly over the last couple of years. Also looking to build a paste plant to be able to support higher mining rates. The Phase 3 Plus expansion was basically bringing Island Gold from a 1,200 ton per day operation, doing about 150,000 ounces a year, to a 2,400 ton per day operation, and doubling the gold production to about 280 to 300,000 ounces a year. So we were at a decision point. The other aspect of that would have been there was a mill expansion. So we obviously had to support, with higher mining rates, support a higher milling rate with our infrastructure. And we were at a decision point with regards to Island Gold to either embark and commit to spending the mill expansion and bringing that mill to 2,400 tons per day, or reevaluating again the opportunity with the synergies with Magino, which has a larger mill complex of 10,000 tons per day. And when we started to really dig into the synergy opportunities, it made perfect sense for us to actually acquire the company. Immediate capital savings of about $140 million. Really, it's the mill expansion that we were going to do at Island now goes away. We also had some tailings expansions that were required at Island as well as part of this growth profile. That also went away as well. So we had right out of the door capital savings of about $140 million. On the operating side, certainly combining and the economies of scale, running everything into one mill complex. Over the life of the mine, we're going to generate about $375 million in savings, about $25 million annually with regards to combining it and running everything through one processing plant. There will also be some consolidation on the G&A side, which will also provide part of those savings for the $375 million. Procurement savings, which are not actually part of the synergies at this point, but we certainly see opportunities there as well. Having the Island Magino district itself, being able to procure on a more bulk basis with regards to our goods and services, as well as our Young-Davidson operation, which is not really located all that far away. From a purchasing procurement point of view, we can look at consolidating the three operations basically and get the benefits on purchasing power. And there are some tax synergy benefits as well with regards to cash taxes being deferred with the larger tax pools as a result of this acquisition. So how does it look moving forward? This is basically how we've outlined our plan. We've communicated this right after the announcement with the acquisition of Argonaut. The Magino mill currently is designed for 10,000 tons per day, and our Island Gold mill currently is designed for 1,200 tons per day. So our plan is to run both mills till the end of this year. So 10,000 running through Magino and 1,200 running through the Island mill complex. Magino is still ramping up, so they just declared commercial production a few months ago. So the mining rates are ramping up to get to full production in the second half of this year. And the mill is also continuing to ramp up to get to full production by through the second half of the year as well. We see some opportunities there based on our due diligence to actually improve the overall throughput of that mill complex on a combined basis. So early into 2025, we actually expect to shut down the Island Gold mill and start feeding everything into the one mill complex. So basically 1,200 tons a day from Island Underground, as well as 10,000 tons a day coming from the Magino open pit to run the mill at 11,200 tons per day. Longer term, so there's a second phase approach there. Once we've completed our phase 3+ expansion, which is now the shaft infrastructure, the entire ore handling system for the underground, as well as the paste plant construction, we would look to then bring the mill complex to 12,400 tons per day, with a little bit more capital required to be invested into the mill complex to be able to get it to that throughput rate on a sustained basis. Adding a pebble crusher, another thickener in all likelihood, maybe a couple more leach tanks. Not significant, and certainly a lot less expensive than what we were embarking on with regards to our Island Gold expansion. So by the end of 2026, we expect to be able to deliver 12,400 tons per day through that plant. We've got lots of tailings capacity. As you can see, we're actually permitted for 150 million tons, so well supported for the current mineral inventory for the long term, and with further upside for expansion if required. We even actually have a bigger vision really for this district, and we really are seeing this as a district. It's really going to become a core asset for the company, for Alamos. As I talked about, we will expand it to 12,400 tons per day, but both with Island and Magino, there is upside potential actually to even increase the overall throughputs from a mining rate perspective and as well as a milling rate perspective for both of those assets. When we acquired the Island Gold operation back in 2017, it had 1 million ounces in mineral inventory. Today it sits at 6 million ounces. So we've invested a lot of money in exploration and have had very good success, obviously, with building up the reserve base, which is obviously why we're really committed to expanding even further on the capital infrastructure that we're putting in place. The shaft infrastructure will be designed to be able to actually hoist 4,500 tons per day of ore and waste. Our current mining rates are going to be 2,400 tons per day once that expansion is completed. On average, we'll probably do about 1,000 to 1,200 tons of waste that will also have to be hoisted. So we do have additional capacity to hoist more ore. So as we continue to understand and develop the ore body, with further mining fronts being able to be developed, there is an opportunity to actually increase the mining rates from Island Gold as well. On the Magino side, currently the mining operations are actually running more than 10,000 tons per day. They're generating more than 10,000 tons per day on a daily basis. The highest grade ore is feeding the mill. We are actually creating a low grade stockpile. So one of the other opportunities that we're going to continue to look at actually is expanding on the mill complex above the current 12,400 that we're targeting by 2026. Looking to actually probably bring it to up to 20,000 tons per day. And this was actually something that Argonaut had already embarked on, some preliminary studies. We feel that there's certainly some full merit there, and it's something that we're going to continue to evaluate. So when you start to bring those pieces in to the district, under the base case that we're talking about right now, 400,000 ounces a year, there's potential to increase that production out of that district itself to be over 500,000 ounces of gold production on a combined basis. Just to give you a bit of an understanding, we are heavily investing in the Island Gold District, and as I mentioned, when we acquired it in 2017, it only had about 1 million ounces in mineral inventory. We firmly believed it had a lot more to be able to support for the longer term, and we've been able to deliver on that. But over the last number of years, we've made other acquisitions within that region from a land perspective to be able to acquire some of the land. Richmont, certainly in 2017, which was buying the mine. We've consolidated with Trillium, Manitou, and now the Magino acquisition to really lock up that district. And we've got over 100 kilometers of strike length that we need to certainly understand much better from a geology and exploration point of view that our teams will continue to work on over the next couple of years. So, the current inventory shows us with a 20-year mine life, but we're very optimistic that it's going to go a lot longer than that. If you look at on a consolidation basis overall with the company, so this is looking at our operating sites currently with Young-Davidson, Island Gold, and Mulatos. As I mentioned, in 2024, our guidance is a little over 500,000 ounces. Once you start to bring Magino in the mix, PDA, which is a Mexican underground deposit that I'll touch on, and Lynn Lake, which would be another open pit development project for us. Longer term, once you bring all of those development projects in line, as well as the Phase 3+ expansion that I mentioned, we'll be well over 900,000 ounces a year annually for gold production. And our costs are going down over time. So those projects that we're developing are better margins, lower costs, which are going to be obviously putting our overall all-in sustaining costs in the right direction, which is heading down for the longer term. And all our assets are long life assets with plus 15 years or more currently. So just a quick overview of our projects themselves. Of our operating sites themselves. Young-Davidson, as I mentioned, located just outside of the community of Matachewan. It's been delivering consistently about 180 to 195,000 ounces a year over the last number of years, certainly since we completed the lower mine expansion. It's been generating over 100 million in free cash flow. So it's actually supporting our expansion that we're doing with Island. So everything is being funded internally, and it does have a long mine life with further upside. So we're very encouraged that we're going to be there for the long term. Island Gold, currently about 150,000 ounces we're guiding to this year. But once that Phase 3+ expansion is completed, as I mentioned, we'll end up doubling our production. In our Mulatos district, which is basically the foundation of the company, currently guiding to about 160 to 170,000 ounces this year. And it generated about 142 million US in free cash flow last year. So again, between Young-Davidson and Mulatos, the growth pipeline that we have in front of us can be funded internally to take us to the next level. Just to kind of show the mining rates with regards to Young-Davidson, it's a high tonnage operation. We completed a lower mine expansion there in July of 2020. And certainly since then, it's been consistently delivering about 8,000 tons per day from a mining rate perspective, as well as a processing rate, and generating about 25 to 26 million US quarterly as far as free cash flow. And we expect that to obviously run for many years. Growth potential for Young-Davidson. So again, general long section looking at the operation. You can see the boxes all around basically our known mineral inventory currently. It's open at depth, open to the west, certainly open at the east. It is a low-grade deposit, which is why it is such a high mining rate. I mean, our average reserve grade is about 2.38 grams per ton. And the reason it works is because we're able to move a lot of rock on a daily basis, consistently of 8,000 tons per day. Looking at our organic growth, so Island Gold, as I mentioned, the Phase 3+ expansion, that's going to be a game changer for us, certainly. More than doubling the mining rates, but also doubling the overall gold production. Once we hit that, that consistent mining rate by the end of 2026, it will also generate pretty significant cash flow, certainly in this market condition, of about 300 million a year. PDA, which we refer to, Puerto del Aire, which is it's an underground deposit. Mexico, again, the founding of the company has been, for the most part, open pit heap leach oxide operations. This is a sulfide deposit. We have mined smaller sulfide deposits in the past through over the 20-year history that we have been there, but much smaller scale, 300 to 400 tons per day. We're looking at something bigger based on what we've been seeing with regards to our exploration success here. And then Lynn Lake, we put out an updated feasibility study in July of last year. The rates of returns have improved from the previous study that we had put out. And it's another district that we see for the long term being able to support our growth profile that we're on over the next couple of years. So Island Gold Phase 3 Plus expansion, as I mentioned, this is kind of the numbers that we would have put out in 2022. And as I mentioned, it's really around shaft infrastructure, paste fill plant infrastructure, as well as the mill expansion at the time, but that mill expansion has now gone away with the acquisition with Argonaut. The total expected growth capital there was about $756 million US. We're pretty well on track. Some of the mill costs, obviously, with regards to the expansion will come off, but we will be adding some dollars as part of the growth profile for the Magino mill. But we're tracking quite well and expecting to deliver on completing the Phase 3 Plus expansion by mid-2026. A couple of general long sections really talking about the mineral inventory. I mean, it's been a really, really good story for us. Like I said, when we invested and acquired the Richmond company in 2017, we really did see a lot of our exploration team, our geology team, were very, very optimistic and excited about the longer term potential of Island Gold. You know, this is a structural system very similar to the Timmins camp, Kirkland Lake camp. They just keep giving for years and years, as you know. I mean, those either certainly from Timmins have been from Timmins for a number of years. You know, there's 100 years of mining in this region, and you know, we firmly believe that there's the same opportunities with regards to our Island Gold deposit. So we've had continued success, growing it at depth, growing it at east and west, and you know, we found outside of the main structural zone, we've continued to find other zones in parallel to the main structural zone, east and west. We've also found mineralization running north-south. So we've been very successful finding gold everywhere, and as I mentioned, you know, that inventory base has now grown to over 6 million ounces. PDA, our Mulatos district, so we've had very good success there as well. So as I mentioned, this is going to be a sulfide deposit. Based on the mineral reserve currently of a little over 1 million ounces, grading about 5.6 grams per ton. We're currently updating our engineering studies and looking to put out a study probably by the end of this month, actually at the end of this quarter, to provide a bit of a high-level detail on what we're looking to do with regards to Mexico. Currently, with what we see based on the studies that we've been doing internally, it's probably about a 2,000 ton per day operation, generating about 100,000 ounces of gold a year. So there'll be mine development, obviously, to be able to access the underground workings, as well as we'll have to actually build a larger mill complex than what we have currently. As I mentioned, we did have some sulfide underground mining previously. That mill was only running about 300 or 400 tons a day, so this is something much larger that we'll expand on. But this is going to keep us in the district for at least another 10 years. With continued exploration success, we expect to be there much longer. Lynn Lake, as I mentioned, you know, this is part of our growth profile, 176,000 ounces over the first 10 years, and then year 11 to 17 really is about stockpiles being depleted over time. Just looking at the map with regards to the bottom right, so you can see the land package there in gray with regards to the borders in orange. So McClellan and Gordon are part of the feasibility study, so that's the areas that we're going to develop as part of the initial mine. But we have other targets within the region, certainly Burnt Timber, Linkwood, Maynard, which we think will keep us well beyond and maintain that actual overall production profile over 176,000 ounces a year for the longer term, well beyond the first 10 years of the operation. So look, we've had great success with our operating mines. We've got lots of money in the bank. We've got a good cash balance, you know, $240 million in cash. We've got a credit facility of $500 million. The cash flow generating from certainly Mexico and Young-Davidson, as well as Island Gold, once the Phase 3 Plus expansion is completed, is going to really, you know, we'll be able to invest that in our growth projects that we have moving forward. And then last but not least, just to compare ourselves to Agnico Eagle. Once we do complete our expansion, certainly with regards to Island Gold and Magino, we will be the 4th largest producer at 400,000 ounces a year. You can see we're surrounded by Agnico Eagle with regards to their operating assets. Certainly, if we look at completing the scenario with Magino to bring it to 20,000 tons per day, we'll be over 500,000 ounces coming out of Island, and which would move us up the chart there to be number 3 and overtake Meadowbank. From Canadian production, you know, 89 to 90% of our production is coming from Canada, stable. Good environment in Ontario, certainly with support from Minister Peary. It's a good space to be in Ontario. Manitoba is also a good district for us. So post-acquisition with our Phase 3 Plus expansion and bringing Lynn Lake online, certainly, we'll be the third largest gold producing company in Canada at 776,000 ounces. So we're very optimistic and really looking forward to the future on the next step of our growth profile that we've been on really since 2003. So with that, I will end my presentation. Thank you.